So, part two, let's continue this discussion. Again, what I wanted to lead you into is, when I'm getting levels tests and level sweeps, I always pay attention to that. This was later in the day on Friday. We came up and checked that out. We did a levels test. Let me draw that out a bit. Actually, I think we did sweep that level on that rotation. Yeah, that was that was actually a level sweep. So what do we got? We got a sweep. If you want to be a seller in that area, the market's expanded its range on the day. Don't try to fade it or any of that. Wait till you get the flip in the Heikin-Ashi, stop above, market starts selling. It actually gave you a lower pivot high and a secondary entry right there, where the Heikin-Ashi went up for a period of time, then rotated back down. So kind of a lazy M. And there you go. On the upside action, the market had this big pullback after the initial nice rally run, had a pullback, and then it lifted, came down, lifted, and there's a big, gigantic W pattern here. So, hey, institutionals are juicing all day. Hey, maybe they're going to come back in and pump it to the moon. When the Heikin-Ashi flips to the upside, you have a higher pivot low with lift. Take a shot. We retested that area later. The Heikin-Ashi lifted once. That failed. We traded a little bit lower. So if you got long, you'd bail or hit your stop. Then you got in a second time, and that gave you something to work with, not a lot. But I mean, now we're talking about noon in the trade day. I would rather, in the later part of the day, trade something more significant than, trying to get in here. Other than this was a very nice W pattern leading up to this lift. It took a while for it to break higher, but there was a W pattern on the microstructure. Okay, so now I want to show you a little visual trick. So let me go in here. Let's go into the scalper and let's start turning stuff off. So let's go to transparent. So transparent. I just want to turn everything off so I can't see it on the scalper. Do I mind seeing the, I don't even want to see the entry one options. Okay, let me hit apply and look at that. Okay, why did I do that? Okay, I'm going to show you something. You could literally sit and trade the markets with just that. You don't even need to see price. I'll show you why. And it's price pattern based. Market came down over a prior level and we had a level sweep. So I'd indicated that from before. We had a big leg down. We had a level sweep. So what do you got right here? You got a W pattern. It lifts. Get in the market. Stop just below most recent price pivot or pivot on the indicator. The market wobbled a bit, gave you a move. Market pulls back. The market just showed you that it's holding that level pretty good. It had an initial bounce, 2 retests, and shot off that area. Market pulls back, starting to stair step higher. You get a shift in the Heikin-Ashi. So let's take a look at that. Let's get back over here. I want to expand this a bit so you can see the transition in the Heikin-Ashi. So, matter of fact, what I'll do is I'll just use a vertical line. So there was that pattern right there of a W forming. You could have taken a shot. Stopped somewhere down here. You might have gotten stopped out, maybe not. If you did, then you got another one back to back. Actually, let me get rid of that. And you had another setup back to back. That area held. I would definitely take a shot at that again if I'd gotten stopped out on the first one. I'm getting little W pattern. I have a W pattern here. I have another one here in the look of the Heikin-Ashi. The other thing I pay attention to is higher pivot lows, price stair-stepping higher, or lower pivot highs, price stair-stepping lower. Or a market interacting with a key level and I get a flip. Okay, here's another good place to take a shot. Here the market just did some stair-stepping higher. It held an area, stair-stepping higher. I get a flip to the upside in Heikinashi, take a shot. Market stair steps higher again, pulls back. Heikinashi flips the upside, take another shot right there. Right when that Heikinashi flips to the upside, get in. Use your ATM function or whatever, set up a bracket, trade it. Market comes up, does a level sweep. Maybe I want to sell it. Heikinashi flips on me, take a shot at it. If I didn't there, I sure in heck better get in here. I got an M pattern now with a flip to the downside, and I have a lower pivot high. So I have a lower pivot high and rotation. That's a heck of a nice area to take a shot at the market. Let's go going forward. Look at that. Big W pattern, higher pivot low, take a shot. I like it when I get these little tight patterns like this. See that little, it's like a little micro W pattern and then lift. Then I get a higher pivot low. Then I get a higher pivot low. So if somebody's looking for some sort of breakout to happen on the day, especially after you see this, if you didn't get in down here where the market's holding recent support, you are now offered a higher pivot low and lift on the Heikinashi, take your shot. Market pulls back again. This one I'm not as excited about. We're getting pretty late in the day. Now we come up, do another level sweep on the day, and Heikinashi flips on me. Take a shot at the short side. Then it gives me a lower pivot high shot at it. So you could literally get so used to just watching the patterns of higher pivot lows, lower pivot highs, like this stuff. This stuff just happens. Come down, trades up, come down, test the level, lift. It's just like higher pivot low, another higher pivot low. Work that long side after basically a shorter period of time, a little bit of a double bottom there. So it's all about setting up your Heikinashi to see stuff where you can get in and take a shot. See a market holding an area, take a shot. Comes down. Stair steps higher, holding, take a shot. Still holding, take a shot. That kind of stuff. Market not breaking to the upside. Rotating after a level sweep, take a shot. Get a key level sweep, a very significant one, take a shot. Get a lower pivot high, take a shot. Get another lower pivot high, take a shot. Or when we re-challenge a level and rotate later, take a shot. There's all types of ways you can use this. You just have to pay attention to the patterns. Level sweep, take a shot. Level sweep, take a shot. You want to wait for the Heikinashi to rotate. And then when the market is coming up and testing upper boundaries of recent price action or lower boundaries of recent price action, you can utilize those areas of test and the rolling over to take your shot. Comes back up, test, rotates, take your shot. Do you have to jump in immediately on the transition? If you want to wait a few bars, fine. I could sit here and trade this without even looking at price and I'm clicking away on a dome, on the buy and sell buttons at market as I'm watching patterns of a Heikinashi in a chart with nothing else. And if you have an ATM built, every time you get in, you're already protected with stop. You got a trail stop mechanism in place. You got a threshold to move your stop from break even to break even, or from risk to break even plus, and so on. So just looking for patterns, especially at the edges of the market or when the market starts trending. When the market starts trending, you can start working higher pivot lows and uptrends and lower pivot highs and downtrends. Market holds an area of price. Where the heck did my drawing tool disappear? It completely disappeared. Oh well. So the market holds an area of price. So it holds right there. Then the market goes in, gives you a higher pivot low. Take a shot to the upside. The market's advancing, gives you another higher pivot low. The market's running and gunning there. Very tight range price pattern. The oscillations aren't wide, they're narrow. That's a market in high momentum. I repeat, wide oscillations can be a market that's trending, but not as strong as a typical high momentum trend. But tight pattern action is another thing to look for, another visualization to look for when you're attacking these higher pivot lows and uptrends or lower pivot highs and downtrends. Okay, there's my drawing tool. So we hold an area of price on a pullback. We lift. You need to get in there? No. But once you see the higher pivot low, that's a good area to take a shot. And then, it's kind of forming a W pattern. Lifts a bit, higher, little bit of pullback, higher pivot low. Narrow price action is high momentum. Oscillating price action is typically of lower momentum. Here, high momentum to the downside. That was actually a level sweep that day. High momentum, lower pivot high, take a shot to the short side. Lower pivot high, take a shot to the short side. As price is leaving a level sweep. But yeah, more narrow of price action, as you see in the indicator, is areas where the price tends to have higher momentum. And then once you put your levels in and you're paying attention to these patterns of the indicator that are analyzing price in conjunction with levels, it can be a really powerful way to trade the markets. Now, this is in the middle of the night. You don't want to trade that stuff, but sometimes you just get layups during day session and other times. But you're seeing W patterns, seeing a secondary W pattern. W pattern lift, buy it. W pattern, secondary W pattern lift, buy it. M patterns with lower pivot highs, especially if that's up on more of the edges of the recent range. Even something like this isn't so bad. You see a market that's been trying to break out. It's trying to break out. Get this other one right over here. It's kind of like micro level sweeps. We swept a level, they sell it. We swept a level, they sell it. Now that would be level sweeps on a very micro intraday basis, not the edges of the recent market range, but just, I guess you could say the structure within a trading range and so on. So I look for these patterns. Oh, that's just a wondrous one right there. It kind of looks like an owl. See the owl head with the ears, put in some eyes. Or maybe that's, I don't know, the abominable snow monster. Who knows? Whatever. But lower pivot highs. They're basically lower pivot highs are like an MPEP. Get short. Markets rotating lower. Lower pivot high, short. Lower pivot high, short. You can find patterns that you like to attack and set up a Heikin-Ashi to know when to go attack them. And then that's a market that has collapsed volatility. No, I'm just kidding. So there you have it. Wanted to cover that, wanted to cover price patterns, but then not necessarily having to watch price if it's distracting to you, but watching the patterns of an indicator that's analyzing price and giving you some level of smoothing. So hopefully that makes sense. It was kind of a topic I wanted to cover, especially for those that are like not at all into automated trading, want to trade manual, discretionary with some ATM functions. So at least when you enter your trade, you got some brackets already built in, whether you're trading on Quantower, NT8, or some other platform. That is a heck of a way to build yourself a simplistic visual approach to trading and just hit those patterns with very, tight stop. In other words, you don't have to risk a lot per trade. If you get into a trade and it rotates on you, you can just get out. If it lifts again, you can get back in. You can trade these tight. You don't have to use wide stops. So very safe for prop firm trading. And you can use this approach with the iGRID tools on the MT4 platform, MT5, TradingView, CTrader, NT8, and Quantower is really, really close. So Quantower's next. So there you have it. If you have any questions, info@gridalgo.com.